What's up traders, welcome back to another Liquid FX YouTube video. Here we're going to be going over one of the most crucial things when it comes to your trading, and this is the determination of a higher time frame bias. How can you use ICT concepts to determine your daily, weekly, 4-hour and M15 bias that you can then use to more accurately execute your positions? So here we're going to be using an example from Euro USD. So I'm just going to label this at the top. So here we have Euro USD. And this is the weekly time frame where we're going to begin. So as you can see, the euro a dollar is pretty much bearish, and it has been for years, right? So if we look at the most recent price swing here on the weekly, you want to first begin with structure, right? So what we see is we see a clear break of structure over here, marked out with this arrow, and I'll label it with a BOS, so that's a boss. And now from here, we need to understand that we have our swing high all the way up here and our swing low, which is all the way down here. Now, the fib tool is used in ICT concepts, and you only really need the 50% level, right? So what does this indicate to us? So from here, it indicates to us two reasons. We have the discount, which is below the 0.5 level, and we have the premium, which is above the 0.5 level, okay? This is the discount over here. This is the premium, okay? Now, this here is the 0.5 level, or the equilibrium. Now, the equilibrium is essentially halfway between the swing high and the swing low, okay? So from here, now that we've identified our basic structure and our PD array, so this is our PD array from the swing high down to the swing low, what do we look for now? Now we look for, as we're bearish, we look in the premium and we look for areas of inefficiency or fair value gaps. So if I just mark them out on the chart, and then I'll explain them in a bit afterwards. But fair value gaps should be pretty familiar with all the traders who have traded ICT. So here we have a fair value gap over here. We have a fair value gap over here. And we have a fair value gap just beneath that over here. Or just over here. Okay, so now we need to ask ourselves, now that we have our basic structure, which is bearish, we have our PD arrays, and now in our PD arrays, what do we look for? We look for fair value gaps. Now, fair value gaps are inefficiencies in price action that has failed to deliver efficiently. So we have a fair value gap here. We have a fair value gap here. And we have a fair value gap just over here. Okay, so these are our fair value gaps in price. Now we have to ask ourselves, how does this help us determine a daily bias or a weekly bias? Now, because on the weekly time frame, we'll begin by looking on the weekly time frame. These POIs here, these fair value gaps or these POIs give us an indication that we could see higher prices, right? So we could, in theory, see price get all the way up to here as a minimum, right? But we could see price reach here, or we could see price reach here. So we have options and we have a reason to look for higher prices. And the reason why we want to look for higher prices is because we're looking for price to rebalance inefficient price action, right? So I'm just gonna write that down. Rebalance fair value gaps. So rebalance inefficiencies in price. So from here, we need to understand that we are overall bullish on the weekly time frame. Even though structurally we're bearish, we have a bullish narrative, and that is for price to simply reach up to these fair value gaps over here. So this is how we're working, right? So we're going to go top down from the weekly down to the daily now. So if we just make sure that these fair value gaps are visible on the daily, perfect. So now let's go down to the daily time frame. Now with the daily time frame, we can begin to dissect more recent structural highs and lows, and we're going to begin here with the price action in front of us. So what we see here is we see a high, low, and a high. Now from this high, we've seen a break of structure over here. So our current dealing range, our current structural dealing range is from this high down to this low over here, right? So this is important to understand. This is our dealing range. And again, just like the weekly time frame, we have a discount and we have a premium just over here, and we have a premium. So I've taken the discount off. We're just interested in the premium here because we have a bearish structural leg, right? We see price break structure to the downside. So we see a bearish break of structure. Now from here, we have to ask ourselves to do the same thing. where are the fair value gaps? So we've identified our market structure. Now we've gone and done our PD array. So we understand we have a PD array, a premium and a discount array. Now from here we have to understand where is our fair value gap. Now if I zoom in right to the top over here, we see a very clear fair value gap, which is pretty much in the deepest premium range. We have a fair value gap just over here. If I zoom in, you can see price is inefficient in this region. And this is what gives us our fair value gap, or our POI. And it's very deep in the overall structural dealing range. Because remember, we identified our dealing range to be this high down to this low, right? You know, from our structural analysis, we see a high, a low, a high, a low, a high, and now we've broken structure to the downside. So from here, what is our bias? So we understand from the weekly time frame that we had our fair value gaps all the way up here. Now the daily time frame backs that because we have a fair value gap here in this region, right? So we have our structure that's been marked out, we have our PD array that's been marked out, and now we've looked for a fair value gap in the premium for this case. So from here, what would our daily narrative be? Our daily narrative would be very simply to target here. That would be our daily narrative. Now, we've seen a sharp decline in price in this region over here. So now we should be mindful of a few other things. We have a fair value gap over here, which price could also look to target, because this is a fair value gap in the discount. So price could also look to target this. Fair value gap over here. So this is essentially a quick overview on how we use the higher time frame PD arrays to find our narrative in price, our overall higher time frame narrative.